This is Jeremy Zwinger with the Rice Trader doing our weekly summary. It's nice to be back and just to give you a report. The last week I just literally jumped on a plane, didn't even get my computer in the office, and I summarized the Rice Trader from reading and editing in the plane and such, so it's nice to just be here. It's been a bit of a crazy week if you haven't heard of our local area. We went from fires where staff have lost houses and such to flooding. So the weather worldwide and in here has been very dramatic, going from very dry to very wet. And that does summarize what I see worldwide with markets and climates being very volatile. As we just jump into this, look at the markets with that in mind. We got to start with oil. Obviously this massive depression of oil is globally affecting the overall market significantly. It's leading to cheaper production costs for sure in the grain markets, which generally will lead to much cheaper prices. It's leading to cheaper prices in construction and such that are helping a lot of stocks, but it's definitely a key thing that must be watched as oil gets cheaper. Probably the biggest thing that's subtly not being talked about. You know, these G20 meetings have been also volatile on that, with Saudi Arabia and the politics behind that I'm not going to get into. Of course, there's meetings with Trump and the president of China. There was supposedly a meeting going to happen with Trump and the president of Russia. These things are also subtle things that need to occur along with the overall geopolitics. But let's just talk about rice for now, just putting those things aside. Key thing for this week, obviously the Philippines. Again, there's a lot of talk of what is done or could be done or is going to be done. What it seems like right now is about 375,000 tons of the 703 is probably done. Of the 500,000, it looks like only partial amounts have been done, about 172. It looks like all but 28 of that is Thai rice, with 28 being Myanmar. So the Philippines remains very interesting as they go through this time. Their political elections are coming up early next year. And what happens? Are they going to tarify how much of this confirmed rice is going to ship? This is what's adding a little bit of instability to the overall market. Of people saying certain things are confirmed, certain things aren't, and how much of the total allocation is going to get done. And then of course how much is being smuggled, how much of this is gray trade, as these decisions aren't being made publicly and the world trade continues to do what the world trade continues to do. So again, Philippines is the key. We're going to watch it very closely, and it's definitely affecting the prices in certain countries as well. In addition to that, Egypt had its tender, of course, and it's been revealed that they have approved the samples from China and Vietnam. How much that will be shipped is unknown, but a lot of talk of what is gonna occur. And of course, Japan did their normal tenders of 60,000 tons, of which 3 was booked in from the U.S. We'll talk about in a second. They were lower prices again as the Japonica market continues to just be stressed by high supplies. Looking elsewhere, you're really in a place where you're seeing prices kind of be affected mostly by the Philippines. Highest supplies since 2000. China continues to be exceptionally aggressive in most countries. You're seeing this in Egypt, you're seeing this in the Korea tenders, you're seeing this everywhere really. East Africa, where if they can take Chinese rice, some of which is lower quality, some of which is very good quality as well, they are. You're seeing it in the prices here, where you have Thai rice at $3.90, Viet rice for 5% at $4.05, pack all the way down at $3.65, in India at $3.75, which puts these origins at a big price advantage for those who can take that material and get good quality with diligence. Definitely a huge advantage. I mean, on the broken side, India is just by far the cheapest at $2.75. For those who can take low quality brokens, it is an amazing opportunity at this point. We are still in a downward market, especially this oil talk, which must be watched. Overall, there's a lot of concern in these markets about slower demand. We are still seeing the 5 majors down 1.5% on the year. This Chinese push is definitely affecting things. The psychology is definitely weakening as we move into this holiday period of how much can be traded in the coming period with such high supplies of everything. And what will the crops be next year? Will these weather concerns affect things, or will we be back in a situation where we have some restriction of crops? At these prices, I would expect the crops to be very strong. Will probably add to the overall supply balance. Outside of that, there's much more on the major origins going on between rupee moves and inside market actions of crops and different things that really the rice trader will summarize. I would say the U.S. is of particular interest this week. Next week they're going to have their annual meeting, their outlook meeting down in San Diego, which of course is our home state. There's a lot of challenges for the U.S. as we've talked about over the last several weeks. Mexico has moved down to below 70% market share, which is their #1 market, and really segregated into 20% high quality and 80%, 100% price sensitive lower quality. I think this is a big opportunity for those who have cheaper rice, like we've talked about. Again, the U.S. price is quoted at $5.35 today, almost a $150 to $200 price advantage, disadvantage, if you were, for the U.S. That puts all these Asian origins in play. And for sure, Uruguay has taken the higher quality markets in Central America and Mexico. And so that split is very key for Mexico. Also, the CAFTA agreement is really affecting the FECROS members, of course. There's a talk of it opening up to trade. Some believe this will help the U.S. Some believe it'll actually open up to our Asian customers. And it'll be interesting to see what occurs with that. And outside of that, there's just a lot of concerns in the japonica market. We see demand off by 23% for the medium grain players, as we've been predicting. This huge amount of Vietnamese rice, huge amount of Chinese rice, they're just flooding the market. It's leaving very little opportunity for the large U.S. crop, and it's going to lead to massive carryout, which is why in the Japanese tenders you saw even lower prices this tender, off about another $10, $15 a ton, besides the last ones. Players like ADM seem negative. Of course, we never reveal what people tell us. These are just our thoughts from what we perceive, that these players seem very negative and that the tenders will continue to go lower and lower. It's just a negative market for japonica on huge supplies. And I expect the crops will be big again next year, unless there's a major price swing in the next 3 months. We also, of course, are going to be talking to many players at this conference and seeing if there's other interesting things. There is a lot of politics. Of course, with the Farm Bill yet to be fully approved, we do hear the deal has been done on approving the U.S. Farm Bill, which is our subsidy program in the U.S. But that is yet to be seen, and the details definitely aren't out as of this point. So must watch this very closely, because there's only 10 to 11 days of business of Congress to approve this. And this is the 2018 Farm Bill. So the Farm Bill has already expired in the U.S., which is a major deal. It's only being held together that it's continually, the congressional session doesn't end until mid-December. So very volatile time for sure in politics in the U.S. on many different fronts, and globally, as we're looking at the global geopolitical situation that you have to watch closely. Besides that, we have a special section on Senegal this week, and also we're doing our monthly more in-depth data on Vietnam. There's definitely a lot going on in all these countries, a lot going on in the overall rice trader. I can only give so much in a 5 to 10 minute talk. It is an interesting market, very interesting. Probably will slow down as normally around the 20th of December, and probably not pick up until the first or second week in January, as is very normal for the world. But between now and then, it's going to be a rush of a lot of business, a lot of activity, and interesting things. So with that, I'm going to sign out. It's great saying hi to all of our TRT subscribers. I hope you're all doing well and blessed. And with that, I'll talk to you next week.